Okay, so where are we in this market, and how can you make the most money? And better yet, how can you make money and help planet Earth? Kathy Entwistle is here with us, Senior Vice President, Private Wealth Advisor with UBS, out in sunny Jersey, all the way in from sunny Jersey. Thanks you for being here.
Thank you for having me.
Before we even get to this social impact investing, let's talk about where we are in this market right now. Where are we?
That's a great question.
I know, and it's one that everyone asks.
Yeah, everybody wants to know, where are we? Well, it's interesting because a lot of people would have thought last year or the year before that we would have seen a bigger decline and stay down.
Yes.
So I think it just shows us that we never know. We don't have that crystal ball, and you have to be invested properly according to what makes sense for you, strong, solid investments, a long-term view, and to keep some money aside just in case you do have an emergency.
A lot of people using the recession word. We're starting to hear that a little, that it's
Right.
coming, that we're in a market downturn. Do you think people should be pulling back their equity exposure?
I don't think people should pull back their equity exposure. I do think they should consider that we could have a recession at some point. I think everybody knows that there's peaks and troughs in the market, and we do have market cycles, and eventually there will be a recession. But what they should probably do is look at their equity exposure and try to take some of the risk out of it, and there's ways to do that, whether it's through some put options or whether it's through some structured notes. There's different ways to address that risk and to de-risk it a little bit, so you can do that.
That's interesting, using other products.
Yes.
Alternative investing, basically, is what
Yes.
you're saying. Do you worry about the global story here with the tariffs?
I do a little bit. I mean, I think about tariffs in the sense of there's a lot of talk, right? There's a lot of things going on, and there's a lot of discussion about whether or not it's going to have an impact, whether or not we're going to be able to solve it before the elections. And I know, UBS feels that it is something that we can work through. Our best case scenario is we can work through it before the elections. If not, it's not going to have a long-term negative effect on the market. So what I think about with tariffs, though, tariffs mean the price to produce products or services is more expensive.
Right.
Companies are going to be either charging more, which is not going to be favorable to the consumer, or they're going to be reducing expenses in order to keep their profit margin favorable, right? Because everything's about profits and earnings. So if they do that, what can happen is people will worry, right? Where do you cut expenses? Usually you go to human capital, right? Labor. So when you start seeing some people, being laid off, you worry about your own job, and then you start to not spend.
Right.
And then that's when you can start seeing a little bit of the recession peeking its head. So that's what I would look for. Are layoffs happening? Are prices either going up or expenses being cut? And what's the general vibe out there in the community? Are people getting nervous about their own personal situation? Are they starting to keep cash or keep things closer to their vest, or are they investing?
Because right now, we have, you and I were just talking about this off air, almost like a false sense of euphoria. The market's been good, everything's good, we got these little tax cuts, and jobs are good, it's like a little party going on right now.
Absolutely. I think everything has been very, very good.
Yeah.
And hopefully everybody's portfolios are showing that as well.
Right.
What I would say, though, is, again, when you look at the way you invest, you don't want to invest money that you need tomorrow. You don't want to put that money in the market. You want to put the money in the market that is long-term money that you don't need to touch right now. So, because every time, after every party, there's, eventually a hangover or there's something happening.
Sadly.
I think there's still opportunities in the market, and you want to be invested and you want to be long-term investors. You can go back to 1928, and if you stay with with long-term investing, you will do better in the long term.
So where are the opportunities in these days?
I think that opportunities are in dividend-paying stocks that are growing. We have a portfolio that I like to use for clients there. So large cap, value-oriented, dividend-paying equities. I think that there's opportunities. We're carving out a small percentage of our clients' equity portfolios and putting them into structured notes where there's some upside and downside protection for them. And I think that's really helpful too. It gives sense of comfort that there's a little bit of downside protection,
right.
If we do have markets.
Because it's coming.
It's coming. Yeah. At some point it's coming, whether it's 2019 or 2020. There's something that will eventually come, and it always has. If you go back and we always say you can't base the future on the past, but it's always good to have knowledge of the past and different market cycles, and know that by paying attention to those cycles, you can also think about what makes sense for you.
Right, and we were talking about how the last year in a bull market is generally pretty darn good. And
yes.
you hate to be on the sidelines.
Absolutely.
So you don't want people pulling out.
You definitely don't. You don't want people pulling out. You don't want to time the markets. You do need to be invested for the long term. If you want to keep up with inflation, keep up with changes in the economy and so forth, you do need to be invested. 22% is the statistic of the average return for the last year of a bull market or before a recession, and you don't want to miss that. I know when you pull money out, people have a very hard time putting money back in. Yeah. You just can't time the market. So you need to carve out that part of your portfolio that you can sleep at night knowing that it's invested in the market and you're there for the long term. We do talk to our clients about 3 buckets, and we spoke about that earlier too. Liquidity is more about what you need for today to earn your living today, to take care of your lifestyle today and over the next 3 years. And then longevity is more long-term investing. So if you know that you have yourself covered with expenses, you have income, you have pensions, you have Social Security, whatever is your way of living your life, you can then put money away to improve your life through that longevity bucket. And that's investing, and that's growth, and that's where you're going to find the growth. Whether or not we see a downturn or not, the clients I know personally of mine that stayed in the market through 2008 ended up recovering and going on to do much better over the next 10 years.
You got to close your eyes and put your head down, I think, sometimes, and turn the TV off or watch the Food Network, as much as I would love that everybody watch the news all the time. But I think sometimes you have to take a step back.
Yes.
Because you're right, in the long run. And I always worry, too, when people pull money out, they're going to, go buy a Tesla. And, there goes the money, right? Because it's liquid and it's sitting there.
Yeah, and or they can stick it in cash and get no return either. And eventually that starts to take away your buying power.
So let's talk long term now and this whole new trend of sustainable investing. I was saying earlier that I credit the millennials for starting this conversation. They want diversity, they want inclusion, and they want to save Mother Earth. And I think those are 3 really awesome things that we're starting to see corporate America jump in on.
Absolutely. Absolutely. I agree with you on the millennials. I do think that they're a great role model for the rest of us.
Yeah.
And today we all look to our kids and to their friends to see what they're doing, and encouraged by that interest in making a difference or making an impact outside of their own world too.
So UBS did this great study on sustainable investing, and it really varies, doesn't it, among the markets?
It does. Actually, the people who are most interested in sustainable investing are the millennials, and also the very wealthy. Understand the impact of investing. It's interesting because a lot of people will look to make differences in their lives other ways. They'll look for philanthropy. They'll want to give. They'll look for maybe in their own jobs. What are they doing to make a difference in the quality of life there and along those lines. But they're not looking in terms of how they invest their money. And in fact, a lot of people will say, well, that I'm not going to worry about investing to make an impact. I already give it through donations. But now the conversation is turning, and we're seeing that investing with impact is not like it was 15 years ago or 10 years ago, where the returns weren't necessarily the same. We do feel that the performance of sustainable investing will do quite well going forward. And the more people get interested in it, the more of a sort of push to invest that way. It used to be eliminating companies that were doing things against somebody's values.
Right.
And then it became more looking at companies that are making differences in the investing world or in the world in general. And the last group is basically looking at investments that or companies are making differences like in the boardroom. There's women in the boardroom, or the gender lens is there, or they're making environmental decisions about the buildings that they're in, or how they're
and that's what we're calling sustainable or socially impacted investing.
Yes.
That's really interesting. We do a lot of that here with women on boards and stuff, or lack thereof, I should say. And to give a nod through an investment to a company that's actually doing a great job, I would think people would open their wallets to that.
I think they would.
Or
they just
at
need
least.
to understand it. I did discuss with you earlier, I do teach classes for women on investing, and whenever we go over topics such as sustainable investing, they're very interested. In fact, some of these women have become clients, and when they come to the office, then we talk about different ways to make an impact through their investing, and they have taken on that and feel really good about it. So I think it's really about educating everybody what exactly is sustainable investing, and then showing them different ways where they can put their money to work.
Because it's not just like, I think many people would walk in your office and think they're investing in the rainforest.
Right.
That's not what we're talking about here.
No.
We're talking about companies that are trying to do it right, that are trying to wake up in the morning and make the right decisions.
Correct.
Albeit in the boardroom or outside, or I'm sure their philanthropic work comes into play as well. Like if a company has a huge sponsorship with the American Heart Association or something like that, I'm sure that all plays into the factoring.
I think so too. I think all of that actually matters to people.
Right.
So they want to be in a work environment that understands the values that they have as employees, and that they're making an impact to those around them.
I could see women embracing this, but the millennials are as well, aren't they?
The millennials are definitely embracing it, absolutely. If you look at what they're doing, they all talk about these side hustles too. Like they're working and then they have their side hustles. And a lot of times the side hustle has something to do with making an impact. So they have their career and they're really enjoying it, but then they're thinking about, well, what can I do that's different? How can I get on this and make an impact? How, whether it's like the Tom's concept where you buy a pair of shoes, you give a pair of shoes, or just where can they make a difference? So if they can do it with investing and making, having companies change the way that they address how they operate, that makes a huge difference. We
were also talking earlier about getting more women to the table to talk about investing. Mm-hmm. And this, to me, seems like a real great way to at least start the conversation.
Absolutely. Women generally tend to align their values and goals with their investing, and they do it more so than, I think personally from my own experience, than the men have. And men seem to like numbers and more concepts, and women are more into understanding how do they connect the dots. And
right, like men are very black and white.
Yeah, very black and white, and women want to understand how can they make a difference. It really matters to them that they can make an impact in their world, whether that's locally, for their children, for their grandchildren, or for their community. It really does matter. So they're open to the conversation.
And we have to go back to your class because you mentioned it earlier, that first of all, the way you got into this business I think is fascinating because you got in through this class.
Yes.
If you could back up and tell that story quickly.
Sure. So back in the 90s, I was teaching a class at a local YWCA.
And now you were not an FA at the time?
No, I was a stay-at-home mom. Yeah. I was a stay-at-home mom, and I wanted to do a little bit more. I realized that there were a lot of my friends, finances weren't their thing, per se. They weren't as interested, or maybe it just seemed a little bit too foreign. So I thought if I could make a difference by teaching and educating about women and investing, that might be helpful. So I did start teaching a class. It was really great. I loved teaching. And a lot of the women would come and say, oh, would you just look at my portfolio? Can I invest with you? Can I move my money over to you? I'm not really happy with the advisor I'm working with. And I would say, I'm not really in the business. I don't do that. I'm just here to teach you and educate you. And it really made me think about it, that there was a need for women, particularly, to feel comfortable learning about investments and understanding what those investments meant to them and their futures. So from that time on, I decided to go ahead and and pursue that career. I think I did tell you too about my first interview, and I was really nervous. I had been out of work for 12 years, and it's a big topic right now too, women coming back into the workforce. And I was very nervous. I thought, who's going to want to hire a stay-at-home mom of 12 years? What do I have to offer? And what I realized, I had a lot of life experience to offer. So the fact that I had the life experience, that I had some of the work I had done ahead of time on my own to prepare for.
And you had an MBA.
I had an MBA in finance.
Doesn't hurt.
Doesn't hurt. And it doesn't hurt. So I completely understand, the topic of finance, whether it's softer or, the economy, but being able to articulate that to others and help them understand it was really important to me.
I think this industry is made for women.
I agree.
Because we talk and we find out things that, that men just don't, they play sports. And I'm totally making it generic. But they don't talk about the things we talk about. So why?
They do. They talk about it in a different way.
Right. But so why do you think there are not more women in this industry? Because the industry is struggling to get more women in.
I think there's not more women in the industry because it feels overwhelming in terms of, as a financial advisor, we're commission-based, even though we might charge a fee for what we do. At the end of the day, we're on commission, which means you don't have a guaranteed salary.
Right.
And I think that it's really great for me and other women who want to earn what we earn, work hard and get paid for it. But for other women, they need to know that there's a set salary. They might have certain expenses that they need to cover and not feel comfortable with that. So I think it's something the industry should think about.
For sure.
Readdressing how to not only attract these really talented women, but also to pay them in a way that they're comfortable and can sleep at night.
Because UBS did this Own Your Worth study as well, and I've talked about this before, that 8 out of 10 women will be solely responsible for their own financial future, and my guess is those 8 will probably be on the older side when it finally happens, whether it's divorce or death.
Yeah.
And then that's a really scary time to start to go learn about your finances.
I always say that. I say that in class all the time, that the worst time to learn about a topic that you're uncomfortable with is when you're in a crisis situation.
Right.
And a divorce or a death is a crisis situation.
Right, and you can't think straight.
You can't think straight to begin with. And if it's a topic that is hard for you to understand or learn about, it's going to be even worse when you're in a crisis situation.
Right, so it's almost like women can be helping women.
Women can be helping women. I think we have to be role models and examples to each other and also to our children. Although we also found out in that report that the millennial age group, surprisingly, is also giving up or abdicating control of their finances to their husbands.
Which blew my head off when I read that.
Me too.
I'm going to start spinning green stuff like Linda Blair from The Exorcist. I don't get that.
I don't get that either because they're up on everything else.
Right.
This is the one thing.
They're starting businesses. They're like rocking the world. I mean, maybe they're just busy and they're like, okay, you do it.
It might be that, but I think it's so important to have that conversation, together. And I think too, in the financial industry, we have an opportunity to help them with that. And I would say when we meet with our clients, we should always make it a point to say we want, both spouses at the table. We want everybody here to talk about what's going to happen with the liquidity event for your company, or how are we going to work with your attorneys to protect that wealth going forward from, different standpoints.
I think it's a fascinating time for you to be in this business because it's prime for women.
Yes.
And I just think it's a fascinating time in general when we're moving now into this socially impact investing. I think, like you said before, man, the volume to get in ahead of it all is brilliant.
It's brilliant. It would be brilliant for anyone to look at it and start investing that way as well, for many reasons. But from a pure numbers standpoint, in the U.S., only 12% of the population is investing in sustainable investing. Now, we measured it with just like if you only had 1% holding of sustainable investing in your portfolio, but only 12%. Now, the people that do invest, they They go deep and they invest a lot of their money in sustainable investing because they really understand it. But I think there's a huge opportunity as advisors, as media, to be able to get out there that this is coming. It's here. It's coming in greater numbers. And it would be wise to get in now to understand where the investment opportunities are. Talk to your financial advisor, find out like what the opportunities are, and see what matters to you and invest in it.
Is it a fund?
There's many different ways. There was an alternative investment fund that UBS had last year. And I actually brought it to a lot of my female clients because I knew that that would resonate with them.
Strike a nerve.
We have separately managed accounts that you can invest in that will line up the UN's mandates with investing, which I think is also very interesting. There's many different ways. There's different managers, there's different funds, there's different ETFs, there's private equity.
Right.
So I think those are all great ways to do it. It depends on your own personal situation, but to find out, have a conversation, and learn, and then decide what makes best sense for you would be a great way to do it.
I think everyone should go take Kathy's class.
We are talking about sustainable investing on Thursday.
See, if only I told you where it was. I'm sorry too. You are terrific. Thank you for taking the time to do this. This is great. I hope people at least Google social impact investing and sustainable investing, because
I think so too.
It's coming.
It is coming. It's going to be a great investment opportunity.